Welcome back everybody. In today's video I will be discussing the top common mistakes people make when trading supply and demand. Now supply and demand is one of the most popular and effective strategies out there, and due to that there is a lot of information online, making it sometimes a bit difficult for new traders to navigate and find what is right and what is wrong. So today I will be sharing some of the lessons and things that I've learned along the way on my journey and things that have helped me improve my win rate as well as consistency. So hopefully these insights will also help you avoid some of the same common mistakes that I made and help you achieve better results in your trading journey. So without further ado, let's get straight into the video. Now, one of the biggest and most common reasons why I see traders not profitable with supply and demand is overmarking zones, which ultimately leads to overtrading. Now, especially in the beginning, traders often correlate taking more trades equals making more money. However, that is simply not the case, and especially with trading, because it really is quality over quantity. And due to the fact that no strategy obviously has a 100% win rate, taking more trades just simply means more opportunities for you to lose money. So I'm going to run through what that can look like on the charts, and then I'm going to go over some ways to combat this. So looking at this example here, we are on the 5-minute chart on gold, and as you can see, we are coming from an uptrend. We are breaking some major highs just like this, and without looking at anything else, you may think that you should be looking for long positions or demand zones. So let's say if price is up here and we are starting to come back down, some potential demand zones that you could mark up, for example this candle here, this zone just underneath it, as well as this one all the way down here as well. And just like that, you have 3 potential demand zones. And for example, if you saw a little bit of a rejection and entered, would have come back down and lost. If you had a limit order here, it would have hit you and then come back down and lost. And then this candle may have given you a little bit of profit before ultimately coming back down, hitting your stop loss and giving you 3 losses. Now me personally, I wouldn't have taken any of the zones simply because we are fairly high up from the original. And if we do actually have a look on the 1-hour chart, you can see that we are actually in a supply zone with liquidity sitting at the bottom, making it very easily for price to come back down, showing us the real move, sweeping liquidity and giving us a bigger risk to reward. So how do you avoid this and actually start taking quality zones? Well, first you need to identify why you're actually over trading as well as overmarking zones. I know for me, when I was starting out, I did feel a lot of FOMO, meaning if there was anything close resembling a valid zone, I would mark it up and wait for an entry simply because I was scared that if it did win, I would feel like I missed out. That obviously resulted in me in taking way too many trades and obviously losing majority of them. So one of the things that I did was actually change the time frames where I placed my entry. So instead of looking at the 5-minute chart and seeing multiple zones every single day and having to choose between them, I simply went up to the 15-minute where there were less setups, which allowed me to feel like I wasn't missing out as much. Now that is just one example, but you can do that in many ways. For example, limiting the amount of pairs that you actually trade. I would highly suggest that if you are starting out, to sticking to just 1 or 2 pairs and mastering that. Or that could also look like limiting your trading window to maybe only 1 or 2 hours to again limit the amount of setups that you see. It's all about making your trading as efficient and as effective as possible while also avoiding unnecessary losses. The second most common mistake that I see traders make is not waiting for confirmation with their zones. They simply enter in once the candle reaches their zone, or they set limit orders, which is very terrible. Now obviously waiting for a proper confirmation is a critical step, especially to determine how much weight the zone actually has, as well as to see if the zone is simply going to hold and not just be broken through from price. Now this obviously does tie into overtrading. Now me personally, something that I did mention in my previous video as well, is that I like to see no bodies closing within the zone and see a fairly strong wick rejection at the zone. I'm going to show you why this is so important. So once again, this example is coming from an uptrend, and once again we do have multiple demand zones that we could potentially take, and I'm going to mark them all up just to show you the importance of waiting for an actual entry. So here we have 5 potential demand zones, And as you can see, this one got broken through fairly fast, with all the candles closing in the zone and then breaking through fairly easily. This zone was broken without even giving a chance to give an entry. Now this candle did give an entry not closing within the zone, so you could have potentially taken this one. And then this example here, once again, not giving an entry and candles breaking fairly easily. However, if we have a look at this bottom zone here, as you can see, no candles are closing within the zone, so I would be fairly confident to take an entry like this and then have a take profit at a 1 to 3. And as you can see, price is going to reach our TP, giving us our win. Now, if you were to have taken all of the zones, you would have taken 4 losses before even taking the winning zone, compared to if you wait for a proper entry and having a strict rule set of what classifies as an entry. You may have only taken this trade here, which actually gave a viable entry, before then taking the next trade with another viable setup, giving you at least 2% winning a 1 to 3. Covering the previous loss. Now, the last mistake that may be holding you back from reaching your profitability when trading supply and demand is ignoring the higher time frame zones. Now, obviously everybody knows that you want to be trading in line with the higher time frame, but a lot of people tend to neglect higher time frame zones as well as key zones on the higher time frame that price may be attracted to and give rejections on. So having a look at this example, this is gold on the 5-minute chart. Once again, we are in an uptrend, so we do have viable demand zones that we could mark up, all with gaps on them, just like this. Now, having a look at this, all these zones are technically valid if they do give a proper entry. However, if we do look at the higher time frames, it may just save us from some unnecessary losses. So going on the 15-minute chart now, if we have a look, as you can see, we are still in an uptrend. However, there's only one viable demand zone, which is this one all the way at the bottom. So if we mark this up with a 15-minute zone, just so we know. Going back now on the 5-minute chart, re-looking at the zones that we previously had, it's a lot clearer which one is actually going to hold and which one is more likely going to give us a bigger risk to reward. And as you can see, price now does come down. We obviously break the first zone as well as the second zone. However, we do have a very good entry and rejection at the last zone. That is in line with the 15-minute. So if we now put our take profit above the previous highs, it is now very easy for price to actually reach our TP. And if we do go back on the 15-minute, we can clearly see just how clean this truly looks, and we are now able to actually reach a bigger TP, as well as making it a lot easier for us to minimize our losses. So that's going to be the top 3 mistakes that I see a lot of beginner traders make. Now, there's obviously going to be things that I didn't mention. For example, having a thought out, detailed trading plan, and of course, no trading plan or strategy is complete if you don't have the discipline to actually stick to it. And the only way you are going to achieve this is through forward testing. Back testing is completely fine, however, can only get you so far. So to sum it up, once again, make sure you avoid overtrading and be very selective with the zones that you do mark up and entries that you do take. Make sure you do wait for proper price confirmation for your valid setups, and as well as utilizing high time frame zones to achieve a bigger risk to reward and avoid being faked out. So with that being said, thank you guys so much for watching today's video. Make sure to like, share and subscribe, and leave a comment down below if you have any future video ideas that you would want to see.